In this market where everyone's so worried about rising interest rates, what do we do with the high-yielding stocks of companies that pay big dividends like utilities? Bonds are in direct competition with these stocks, so when rates rise, the utilities tend to get slammed. Which brings me to Entergy, ETR, a company that's a straight-up power generation, transmission, and distribution utility south of the Mason-Dixon line, 2.8 million customers across Texas, Louisiana, Arkansas, and Mississippi, including my daughter. But it also has a pure power generation business in the Northeast and Midwest that sells electricity to wholesale customers, namely other utilities on the distribution side of the business. Plus, yesterday, Entergy announced a major new solar project that will make New Orleans the first city in America to both generate and, more importantly, store solar power. Entergy, the stock's been a bit of a roller coaster, but the company's producing solid returns, and down at these levels, sports a 4.5% yield. So let's take a closer look with Leo Donati, he's the chairman and CEO of Entergy, learn more about how his company's doing and where it's headed. Mr. Donati, welcome back to Mad Money. Good to see you, sir.
Nice to see you.
Thank you.
Thank you.
Now, I think, Leo, one of the things that's hard for people to understand is your company is doing incredibly well. I mean, your area is booming, and you're really doing. But in the end, you're still trapped because you trade with a cohort. Do you think it'll ever be different that all the work you're doing will make it so the stock is more of a growth stock and people separate it from the other utilities?
Well, we would hope so. We would hope that that's what's going to happen. And the situation that we've got because of the growth that we're seeing in the Gulf South. Manufacturing businesses under construction as we speak, all up and down the Mississippi River corridor. We've got a lot of growth in that utility business, which supports the dividend. And as you mentioned, in that bond substitute world, as the interest rates start to rise, the yield has to rise on the utility sector as well. But we've got this growth opportunity that should support a growing dividend. So we should be able to compete pretty well with that.
Well, that's the thing. I mean, significant retail saying industrial renaissance. You are at the heart of it. We had Dan D'Amico the other day on from Nucor. I mean, they're building plants where you are because the energy is that cheap.
Absolutely. It's natural gas and electricity. So we have electricity rates that are 20% below the national average. We continue to compete very well. Heavy metals, chemicals, wood and paper, they are all constructing facilities down there, and they use massive amounts of electricity, and that's what we do. And we've got a construction program that has to match theirs so that we can bring plants online fast enough to serve them. At
the same time, I mean, you've made a major commitment to solar. Now, theoretically, you don't have to. You got the cheapest natural gas in the world, but you think it's important.
We think it's important long term. We've got to be able to understand how we can utilize all technologies to serve our customers better. And in the world of solar, utility scale solar is going to always be a lot more efficient and cheaper than it will be on the rooftop. So if we can manage solar and we can manage the storage piece of this, it becomes a lot more valuable. Now it's costly.
Right, but you've mentioned, and there's a new MIT study that's come out, that we subsidize the wrong people for solar. We should be subsidizing the utilities, not the individuals, because it may, in the end, backfire.
Well, one of the things we do is we subsidize the amount of the investment as opposed to the amount of the output to some extent. So when we look at tax credits on solar and they're based on investment dollars, you actually get hurt if you're a utility and you're doing a much more efficient per megawatt hour basis. You get less of a subsidy.
Because we want the rates to come down. That's why I said we want the average working person to pay less than utility. Now, over the weekend, you had a reactor in New York, Indian Point, that spilled thousands of gallons of oil, might be offline for weeks. What's the status up there? I know the governor was up there talking about it.
And right now, what we know is at the transformer yard outside of the nuclear part of the facility, we had a fire at the transformer. It was quickly put out by our on-site team and the passive systems that are there. We do know that oil escaped from the transformer. We don't know where it ended up yet. We're doing that analysis right now. The plant should be offline for a couple of weeks. We took the plant down safely as designed. All our employees did a great job of managing the situation, but right now that transformer is the way that the power gets to the grid. So the plant can't come back online until the transformer's there because we've got to have a way to get the power stepped up.
But it looks like that when you put new plants up, even though nuclear is cheaper, and we're very pro-nuclear on the show, candidly, you go in natural gas. I mean, that's the new plants.
Yeah, with the plants that we're putting in place, we've got to do them relatively quickly.
Right.
We're both replacing aging infrastructure because about 75% of our non-nuclear fleet in the Gulf South is over 30 years old. So we've got to replace those while we also meet the load growth that's coming with all these manufacturing facilities. We've got to do that relatively quickly. We can't take 10 years to build a new plant. We've got to do it in 3.
Which is more dead, coal or nuclear in this country?
Well, I'd hate to say that any of them are dead. I actually would. I think right now it's a little bit harder to build a coal plant than it is a nuclear plant.
Isn't that something?
And we've got a couple of nuclear plants under construction right now, but virtually nothing in the coal space.
Okay, if you had to get, we had a big utility, Williams Partners today. I keep waiting for the gigantic consolidation in utilities, and that Entergy would be a consolidator. Is it not going to happen in our lifetime?
It's happening. Consolidation is occurring in our industry. It doesn't happen as quickly because the regulatory process is so difficult to overcome. You've got the federal regulatory process, but you also have state and local processes that you have to go through. And that tends to make it take a long time to get the transactions done. It's not that they don't make sense. Right. It's just that they're really hard to close. And if it takes 18 months to 24 months to close the deal, a lot can happen in that time frame.
Right. Well, then we want to stick with it for distributions and because you got growth, which is what we want. We want growth and income, and your company's giving it to us. That's Leo Denoy, the chairman and CEO of Entergy, 4.5% yielder, really good growth characteristics. That's what we're looking for when we're trying to build income. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.